The genomics revolution. 3 stocks leading the precision medicine boom. Imagine a world where doctors can predict diseases before they happen, design treatments customized to your DNA, and even edit out genetic disorders as easily as correcting a typo. That future is already here, and it's called precision medicine. Genomic research is unlocking groundbreaking medical advancements, from curing genetic disorders to fighting cancer with personalized therapies. And as this technology grows, so do the investment opportunities. In today's video, we're diving into 3 genomic stocks at the forefront of this revolution. Companies leading the charge in gene editing, sequencing, and precision treatments. Hi, welcome to the Finance Savvy. If you're passionate about investing in the future of healthcare and technology, make sure to hit that subscribe button for the latest updates on AI, biotech, and game-changing stocks. Got questions? Drop them in the comments. Now, let's dive into these 3 genomics powerhouses set to reshape medicine and your portfolio. The rise of genomics and precision medicine. The genomic industry is revolutionizing medicine by advancing personalized treatments, making one-size-fits-all drugs a thing of the past. With breakthroughs in gene sequencing, CRISPR-based editing, and targeted therapies, companies in this space are working toward treatments tailored to an individual's unique genetic makeup. Microscope, the global precision medicine market, is projected to grow from $119 billion in 2025 to $470 billion by 2034, expanding at an impressive 16.5% CAGR. Meanwhile, the CRISPR gene editing market alone is expected to hit $11.71 billion by 2030, growing at a staggering 20.5% CAGR as more therapies receive regulatory approval. So which genomic stocks are best positioned to ride this wave of innovation? Let's break down 3 companies at the cutting edge of this medical revolution. Number 3. Vertex Pharmaceuticals, VRTX, CRISPR game changer in genetic medicine. Vertex Pharmaceuticals, VRTX, is a biotech powerhouse focused on treating genetic diseases, and it's making waves in CRISPR gene editing. 1. Why Vertex? It developed Casgevy, a CRISPR-based therapy for sickle cell disease, approved by the FDA and recently backed by NHS England. It launched Journavx, a revolutionary non-opioid painkiller, the first of its kind in over 20 years. Its blockbuster cystic fibrosis (CF) treatments dominate the market, generating billions in annual revenue. 2. Financials and growth. Q3 2024 revenue hit $2.77 billion, up 11.6% YOY. EPS forecast for 2025, $18.78, plus 8.7% growth. Stock performance, plus 17.5% in 6 months, closing at $461.68. 3. Should you invest? Vertex is a proven leader in gene-based therapies, expanding beyond cystic fibrosis into CRISPR and non-opioid pain relief. Its strong pipeline and consistent revenue growth make it a solid long-term play in the genomics revolution. Number 2. Regeneron Pharmaceuticals, REGN, advancing gene-based treatments. Regeneron, REGN, is a biotech innovator known for blockbuster drugs like EYLEA, Dupixent, and Libtayo. Now it's diving deep into gene-based therapies. 1. Why Regeneron? Partnered with Truveta to build the world's most advanced genomic healthcare database, fueling AI-driven drug discovery. Its next-gen lymphoma treatment, odronextamab, is showing groundbreaking results in clinical trials. Continues to expand into immunotherapy and precision medicine, tapping into multi-billion-dollar markets. 2. Financials and growth. Q3 2024 revenue, $3.72 billion, up 10.6% YOY. EPS forecast for Q1 2025, $10.26, a 7.5% increase YOY. Stock performance, $672.98 per share, a slight dip but poised for long-term gains. 3. Should you invest? Regeneron's expertise in immunotherapy, big data partnerships, and AI-driven drug development make it a high-potential stock as precision medicine takes off. Number 1. Illumina, ILMN, the genomics gold standard. Illumina, ILMN, is the backbone of the genomics industry, providing the sequencing technology that powers precision medicine, cancer research, and genetic testing. 1. Why Illumina? Partnered with NVIDIA to develop AI-driven genomic analysis, supercharging drug discovery. It's the #1 supplier of sequencing machines, crucial for genetic research and clinical diagnostics. It dominates the multi-omics market, combining genetics, proteomics, and AI to uncover new treatments faster than ever. 2. Financials and growth. Q3 2024 revenue, $1.08 billion, with a strong turnaround from losses. EPS forecast for 2024, $4.13, up a massive 379.8% YOY. Stock performance, plus 8.3% over 6 months, closing at $132.74. 3. Should you invest? Illumina's market dominance in genetic sequencing, its AI-powered innovation, and its key role in precision medicine make it a long-term winner in the genomics boom. Final thoughts and what's next? The genomics revolution is just getting started. These 3 companies, Vertex, VRTX, Regeneron, REGN, and Illumina, ILMN, are all positioned to ride the wave of precision medicine as it reshapes healthcare. But there's another stock that's making huge moves in robotic-assisted surgery, a field that pairs perfectly with precision medicine. Intuitive Surgical, ISRG, is revolutionizing the way surgeries are performed with AI-driven robotic systems. Want to know more? Stay tuned for our next deep dive on Intuitive Surgical, ISRG. You won't want to miss this one. And that's it for today's video. If you found this information valuable, hit that like button, subscribe to the Finance Savvy, and turn on notifications so you never miss an update. So, what do you think? Which of these stocks has the biggest potential? Let us know in the comments. And if you have questions, we'd love to help. And thanks for watching, and stay tuned for our deep dive into Intuitive Surgical. See you in the next video. From genomics to robotics, is Intuitive Surgical stock, NASDAQ ISRG, a buy in 2025? The future of medicine is here. Imagine a world where diseases are treated based on your unique genetic code, and surgeries are performed with pinpoint precision by robotic arms guided by artificial intelligence. Sounds like sci-fi, right? Well, it's not. It's happening right now. In our last video, we explored 3 game-changing genomic stocks that are revolutionizing precision medicine, the science of tailoring treatments to your DNA. If you haven't watched it yet, be sure to check it out. Today, we're shifting gears from genomics to robotics to analyze a company that's redefining the future of surgery, Intuitive Surgical, NASDAQ ISRG. Welcome to the Finance Savvy. Hi. In today's video, we're diving into Intuitive Surgical, a pioneer in robotic-assisted surgery. Is it a buy for 2025? We'll break down the latest earnings, future growth prospects, and whether the stock is worth it. Before we get started, please hit that subscribe button for more market insights and investing tips. If you have any questions, feel free to drop them in the comments. We'd love to hear from you. Now let's jump in. The MedTech giant behind the da Vinci surgical system. For over 2 decades, Intuitive Surgical's da Vinci system has been the gold standard in minimally invasive robotic-assisted surgery. With robotic precision far beyond human capability, surgeons can operate with improved accuracy, reducing complications and improving patient outcomes. The company has maintained its dominance by constantly innovating and expanding the da Vinci platform's applications across various surgical fields, including urology, gynecology, and general surgery. But the real game changer? Intuitive Surgical's razor and blade business model. They don't just sell surgical robots. They also make money from instruments, accessories, and maintenance services required for each procedure. This generates a steady stream of recurring revenue, making the company highly profitable. And it's working. 84% of Intuitive's total revenue now comes from recurring sources, compared to just 75% in 2021. Blockbuster Q4 2024 earnings. Record-breaking, but ISRG wrapped up 2024 with a blowout Q4 earnings report. 1. Revenue. $2.4 billion, plus 25% YOY. versus Wall Street's expected $2.25 billion. 2. Earnings per share, EPS $2.21 versus $1.79 expected. But here's where things get interesting. Despite these stellar numbers, the stock dipped post-earnings. Why? Investors were spooked by the company's conservative 2025 guidance. A. Management expects procedure growth of 13% to 16%, still strong, but slightly lower than in 2024. B. Margins are expected to decline slightly as the company rolls out its new da Vinci 5 system and invests heavily in AI and machine learning advancements. So, is this just a temporary slowdown or a sign of trouble ahead? The next frontier, AI-powered surgery with da Vinci 5. Perhaps the biggest news of 2024 was the FDA approval of the da Vinci 5 system, Intuitive Surgical's most advanced robotic platform yet. What makes da Vinci 5 a game-changer? A. 150 design improvements for better precision and control. B. 5x the computing power of its predecessor, integrating AI and machine learning. C. Enhanced automation that could eventually reduce surgeon fatigue and improve outcomes. This innovation could spark a new wave of hospital upgrades, boosting revenue in the coming years. Intuitive already installed 362 da Vinci 5 units in 2024, and many more hospitals are expected to upgrade in 2025 and beyond. What's next for 2025 and beyond? Wall Street analysts see 2025 as a transition year for ISRG. Growth is still solid, but the pace is slowing slightly before an expected acceleration in 2026. Metric 2024-2025 estimate 2026 estimate. Revenue in billions 2024, $8.35, 2025 estimate. $9.57, 2026 estimate. $11.10. Revenue growth YOY. 2024, 17.2%, 2025 estimate. 14.6%, 2026 estimate. 16%. EPS, earnings per share, 2024, $7.34, 2025 estimate. $8.02, 2026 estimate. $9.43. EPS growth, YOY, 2024, 28.5%, 2025 estimate. 9.3%, 2026 estimate. 17.6%. Key takeaways. 1. 2025 may be a slower growth year, but the long-term outlook remains strong. 2. A major upgrade cycle in 2026 could push revenue and earnings even higher. 3. AI and automation advancements will play a critical role in shaping the future of surgery. Should you buy ISRG stock now? Here's the dilemma. 1. Pros. A. Market leader in robotic surgery with high barriers to entry. B. Strong recurring revenue from instruments and services. C. AI-powered da Vinci 5 system could drive long-term growth. 2. Cons. A. High valuation. The stock trades at 45x 2025 EPS estimates, expensive compared to most healthcare stocks. B. A short-term growth slowdown in 2025 could limit the immediate upside. 1. Verdict. Hold for long-term investors. Wait for a dip if you're new. A. If you already own ISRG, hold your position. The long-term potential is still bright. B. If you're looking to buy, consider waiting for a market dip before jumping in. While 2025 may be a breather year, 2026 and beyond could see another explosive growth cycle as hospitals adopt AI-powered robotic surgery. What's next? The future of robotics in medicine. We've talked about precision medicine with genomics and robotic-assisted surgery, but what happens when these two fields merge? That's exactly what we'll cover in our next video, where we'll explore how AI-driven robotic surgery and genomics are coming together, and one hidden stock that could dominate this space. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more market insights and investing strategies. Got questions? Drop them in the comments. We'd love to hear your thoughts. Until next time, happy investing.